Hi traders, and welcome to my video on morning gappers. I'm going to show you how you can use this simple strategy to capture moves such as this one here for around 30 pips. Okay, so what we're going to look for on a currency pair, this is the pound dollar 1 hour chart. You can use this strategy on any currency pair, major, minors, exotics. Personally, I prefer major currency pairs simply because they tend to have more liquidity and the spreads tend to be lower. Okay, and this is a strategy. It doesn't always gather a great number of pips, so you're going to want to pay attention to the costs. Okay, so what we're going to look for is the morning gap. Okay, and the morning gap will appear usually Sunday or Monday, depending on where you are, your time zone. But what we're looking for is the opening candle after the close of play on Friday. Okay, so if I mark this candle here, this was the last candle on the Friday, this down candle here. And you can see when the market reopened on Monday, this candle was all the way over here, creating a gap of around 15 pips. Okay, so you tend to see these gaps, morning gappers as they're called, on Forex currency pairs just after the market opens, because there's some price action that's been happening during the weekend. When the retail market is closed for the majority of retail traders, thus creating this gap. Okay, so how do we trade this, I hear you ask? Well, this is how I would trade it. You can trade it how you like. First of all, this particular gap, I'm going to just, you need to determine what direction you're going to trade in, okay? Because are you going to sell to close the gap, or you're going to buy because you're expecting the price to continue moving upwards? So what we need to do is we need to look at the overall market picture. So if I zoom out here, very simple. We've hit a level of resistance here. Okay, as you can see, I've marked that on the chart. And it looks like we can say overall we are in a downtrend, although around here we've seen some consolidation. I'm just keeping a close eye on this area of resistance here. Okay, so if we zoom back in, find our gap. There's a lot of bearish price action you can see here. We do have a level of support there. We also have some bullish momentum. However, you can see that price has actually broken through this trend line here, which gives us more confirmation for perhaps taking a short trade. Okay, so we also have a level around here somewhere, and a slight M pattern there, so we could expect a breakout to the downside. So what I would do in this instance, as the market opens, I'm going to look to place a short trade to close this gap, and put a stop loss, a sensible stop loss, probably around 20 pips or so, in case the price continues to move up. But if we enter here when the market opens, you need to be wary. This is another good reason why you want to do this on major currency pairs only, is because when the market opens, the spreads can be wider than usual. Okay, that's primarily because there's just not the liquidity there. And some may argue because people are going to try and take advantage of such situations, so brokers tend to widen the spreads. You'll see this especially on exotics and minor currency pairs, and even on majors. But you know, if you're trading something like the GU, the EU, the spreads are generally going to be lower. And if the spread's too high, just avoid the trade altogether. That's what I would do. So market opens here, we can place a sell trade, and once the gap's closed, we're only looking at around 10 pips in this instance. But if price makes it that far, you could always move your stop loss to break even, okay, which would be up around this level here. And then we can just wait and see. If price continues to drop, you can close part of the position if you like. But you know, if price does continue to drop, you can trail your stop loss all the way down and just try to maximize as much profit as possible. So that's a basic way to trade a morning gap on a Forex currency pair. As I said, the gaps will appear on Sunday and Monday, depending on your, not just your time zone, but your broker time zone. Okay, so that's yeah, a very simple strategy. To be honest with you, it's not something that I would be trading myself. I mean, when I just look at, you know, I can see much better trade opportunities straight away. You've got this level of resistance here. Okay, the market making lower highs here. Okay, we've got um, a triple top candlestick formation, a big breakout down there. You know, I would rather be looking for these big moves. I'm not constrained to times or market opens or, you know, gaps and so on and so forth. You know, you catch a nice breakout like this and, you know, that's over 300 pips potential. I have lots of videos on how you can capture big trends like this. I mean, I'd much rather look to get in a long-term move like that and ride the trend than I would to try and gain a few pips from a gap closing when the spreads are high. But, you know, it is a strategy that has been around forever, that there are traders who use it. If we can just find another example here, if I just mark that off on the chart for you and zoom in. So going back to the morning gap, here's another instance of a gap. Okay, so this is the Friday close candle here. And you can see the market gap open here. So it is around a 12 pip gap from the close. Okay, prior to the weekend and the open after the weekend. So that's our gap there. In this instance, we were in a downtrend. I mean, as I said, we would have liked to got in up around here. I mean, even here on this, the breakout of this, you got a nice M pattern formation, another breakout similar to this one down here. So, you know, you could have even entered on the pullback once this new level of resistance was formed here. Okay, and price started to move away, started to make lower highs. Yeah, a wedge pattern and a nice breakout to the downside there. I mean, this is completely something different to the morning gap strategy. I just wanted to emphasize I don't think that it's a good idea to follow rigid strategies. It's just my opinion. I mean, when we have all this opportunity here, why are we going to wait for, you know, a gap down here to try and enter the trend at not the ideal opportunity, especially after this big candle here. It looks like an NFP non-farms payroll first Friday of the month candle. But yeah, in this instance, if you insisted on trading the gap, you might be looking for, even though the overall picture is down, I mean, following on from a big bar like this, I probably would have avoided the trade based on that alone. But as the gap was down, just as in the other gap, which, you know, the price opened up above and it fell, here it opens below. So we can expect, well, we can hope that the gap closes to the up direction. But again, you know, if the gap does close, what's that, 12 pips? Maximum potential on this move of around 20 pips. Take into consideration your broker spreads, which will be high at the open, commission, slippage. I mean, is it worth the risk for 20 pips when, you know, you had these two power trades here for 300 pips? If you were late on this entry, there's still, you know, almost around 200 pips potential there. I mean, ample opportunity to enter in this trend. So you wouldn't really be needing the gap there. Okay, another example, one more. You can see a gap here. Okay, so that's Friday candle close. The gap here is quite a small gap, but it did close up only for a few pips. So more often than not, gaps will tend to close. Okay, and it's a simple strategy. I've actually created EAs and tested this theory over tons of data across multiple currency pairs, basically taking an entry in the opposite direction of the gap. So in this instance, it gapped down, so the EA would place a buy trade, okay, to close the gap in an upwards direction, and just no matter how many different variations of stop losses or take profits, even indicators added for trend direction and price action analysis included, I just couldn't find a strategy worthwhile. Okay, and I think it primarily because the spreads available to the retail traders just make it very difficult. And as I said, I'd much rather catch big moves on 1 hour plus charts than I would trying to, you know, hope that a gap closes. Again, another example of a nice trend there. Ample opportunities to enter this you know, breakout there. We could have entered this trend, nice pullback there, wedge pattern, a breakout there. I mean, when you can capture big moves like these for hundreds of pips, I'm not sure why we'd be trying to trade the gap. But in saying that, there may be traders out there who have used it successfully and continue to do so, and more power to them. Okay, well, hopefully you found something useful in this video. I appreciate you watching. Please like and subscribe for more, and I will catch you on the next one.